Welcome back to the Microlearning Institute. In this tutorial we calculate the profit or loss on disposal of an investment, and we show how to calculate this profit and loss in both the individual accounts of the company which has made the investment and also in this case in the consolidated accounts. In this example we're told that Barney has held a 70% investment in Beanie for a number of years. Barney is now disposing of this investment. We're also told that goodwill has been calculated using the full goodwill method and that there is no impairment on goodwill. We're given details of the cost of the investment, the fair value of the net assets of Beanie at acquisition, the fair value of the non-controlling interest at acquisition, and in relation to the disposal we're also given the details on the sales proceeds and the value of the net assets of Beanie at disposal. So firstly, let's look at how we calculate the profit or loss on disposal in the individual accounts of Barney. So here we're told that the proceeds on disposal is $3,000. We're also told that the carrying amount, and the investment is being carried at cost, is $2,000. So very simply, the group gain on disposal is $1,000. Additionally, we're told that tax is charged on this gain at 25%. So here we see that as an individual entity, Barney pays tax of $250. Next, let's look at how we calculate the profit or loss on disposal in the consolidated accounts of the Barney Group. Now, the consolidated accounts of the Barney Group, when we acquired Beanie, we calculated goodwill using the full goodwill method. So again, just to revisit that calculation, we saw that the cost for the group share was $2,000, and we were also told in the question that the non-controlling interest at acquisition in Beanie was $800. Now we need to compare that with the 70% share of the fair value of net assets that was acquired by the group, and also the 30% which was allocated to the non-controlling interest at acquisition. And here we see that goodwill at acquisition in the group was recognized at $670, and goodwill in the non-controlling interest was recognized at $230. Now we're also told that there's been no impairment on this goodwill. So now we can look at the disposal working, and again, as previously, the group receives $3,000 for the disposed shareholding. But now we need to look at what value was the group carrying Beanie at the date of disposal. We're told that the net assets of Beanie at the date of disposal are $2,400. And of course, we, the group, we own 70% of those net assets, which is equivalent to $1,680. However, of course, we, the group, because we didn't purchase Beanie at its fair value, we purchased at a premium over and above its fair value, we also recognize goodwill of $670, just calculated from the previous working in our holding of Beanie. So consequently, the total carrying amount of Beanie is $2,350. This gives us a group gain on disposal of $650. But of course we must remember that we've already paid tax as an individual entity of $250, and this is reduced from the carrying amount of the group gain. Thank you very much for watching this short tutorial in relation to a full disposal of an investment.